Okay guys, I'm going to show you a quick tip how to hang on to your trades longer. And a warm welcome to one and all. For those of you who have not seen me before, my name is Langers. I am the overgrown child that is the Scruffy Trader. What I'm trying to do is kind of put trading in the real world. Maybe show you a trick or two along the way. So if that sounds good, please click the little subscribe button. Genuinely helps. And if you are subscribed, just make certain the bell icon's switched on. So how am I going to help you today? Well, I'm actually in the middle of a conversation with Yoxie. So good shout to you, my little friend. And I'm going to try and answer the question that I was badly typing. Because sometimes when you're doing the tippy-tappy, it doesn't always, well, it doesn't come across as well as it should. So the gist of it is, how do you hold on to your trades longer? Well, that's the million-dollar question, isn't it? Because when you're at the hard right of the screen, we have no idea whether that market is going to go up, down, or indifferent. We just genuinely don't, you know. And the only way we would is if we had one of these things. Sadly, most of us don't. So we just have to use a little bit of creativity and a simple plan. And I do implore that you keep your plans simple. If you over-engineer the process, you'll find you get bogged down and you'll probably miss a lot of the good meat on the bones simply because you're just looking for the holy grail that isn't there. So let me explain. I'll pull it onto a chart and we'll have a little look at it. And hopefully what I'm saying might make a little bit of sense to you. So here we go. This is my 5%ers MT5 chart. I've cleaned it up because I don't like the normal way. And the 5%ers, if you've never seen it before, there's links for it in the description. But it's a prop firm that I've been trading. It's a funded account. And at the moment it's in profit. And I'm on doing a little bit of work getting ready for next week. So it seems to be a good opportunity to show you the screen. So how do you hold on to your trade longer? Well, there's a couple of ways you can do it. Well, saying there's loads of ways you can do it. The first one is something as simple as a moving average. And as you can see here, you have a moving average running through the middle. The problem with a moving average is when you're holding on to trade is you sometimes give too much back. And that's the trouble with it. It's the lagging nature of the moving average. So the way around that is you speed the moving average up. So you'll put a 12 on or an 8, something like that. If you're using a 20, as you can see in this example, that trade rattled up and then it's give it back. You know, so you're actually giving way too much profit back. And this particular screen that we're looking at now is a trade that I took yesterday for the Scruffy Squad, where I did it in real time for them. And, well, everything I do for them is in real time. But this one, I showed them the setup at 10 o'clock in the morning, how it was built up, where all my indicators are, how they line up, where my levels are, everything. The trade triggered at around 2 in the afternoon, and then I killed it at around 20 to 7 at night. So it was a long trade. How did I know to keep in that so long? Well, what I'm about to show you is how I did it. And it's very, very simple. I speed up the RSI. And I know you look at it and go, you do what? Speed up an RSI? Why on earth would you do that? Well, it's because the RSI is a strength indicator and I want to see the volatility, but I need to know when the strength is running out. And I'll show you. I have it set up as a template. So that's a normal RSI. All I've done is just change it down to a 6 setting. Speeded it up to a 6. Pushed out the boundaries. So instead of it being sort of 30, 70, what you would normally have, it's at 85 and 15. And as long as the RSI is between those two, you sit in it. But as soon as it breaks the outer extreme, because that's 70 and that's 85, it's time to be looking to get out of the trade. And the way you get out is twofold. It's either when it comes back into itself, in other words, where it rolls over and goes into there, or the first opposing candle, a candle count. So let me show you. I'll just drop a straight line on. So as you can see here, this is still working its way to a moving average. So if you were using the moving average to get out, that's still got a ways to go. And it's going to, well, you just give everything away. However, if you look at this, it breached here. This is the outer extreme. And as soon as it does that, you go into what's called candle count. And it's 1, 2, 2. You get out there. First opposing candle. So it helps you hold the trade so much longer. Likewise, back here. There you go. Blasts up, breaks it there, boom, boom, boom. First opposing candle, get out. But if you were looking at the moving average, look how much more profit you give. So it's a very quick and easy way to hold your trades. And it really is just because I'm having the conversation with Yoxie at the minute and I wanted to explain it. But what time frames do you use? Well, the way I do it is I would look for a trade idea on the hourly and I'll monitor it the next time frame down on the 15. So this is where I would place that RSI. Likewise, if I was working on a 4-hour chart, I would monitor it on an hourly chart. Basically, it's the time frame below. So I hope that kind of makes sense. And if you're stuck and trading doesn't make sense to you, by all means contact me because I genuinely answer every query. My contact details are in the description, and so is details of the Scruffy Squad, where we all look after each other and we chat daily, and you'll see me live streaming and talking trades and playing terrible music and giving terrible jokes as well all day. So simple as that, guys. So there we go, a little quick snippet for you, and I hope you can put that in your little tool bag. So as always, do what you love and the money will follow. See you all on the next one.